Good morning and welcome to Missoula Real Estate Today. This is Denny Bedard. Missoula Real Estate Today is presented by Diane Beck of Windermere Real Estate. Diane's been working with buyers and sellers in the Missoula market for over 25 years and shares her insights on the local housing market. Along with her trusted partners, Diane provides complete service for your real estate transaction and brings us guests who provide useful information on industry-related topics and trends. And now, Missoula Real Estate Today on News Talk, KGVO. Thank you so much for making Missoula Real Estate Today a part of your weekend. We sure enjoy having you. We also enjoy having all of our special guests that Diane Beck from Windermere Real Estate provides, including Myles Link. Myles is with Opportunity Bank of Montana, mortgage loan officer there, and an old hand at Missoula Real Estate Today. Are you getting tired of coming in?
No, it's something. It's great. It's great. Yeah, but it's been a few years, right?
Yeah. But we are happy to have you with us. Let's jump on in. What effects are the current housing market conditions in Missoula having on your business? Are things staying pretty brisk with folks wanting to be ready if the right home comes along?
Yeah, it's been a busy few years, and of course, it's nothing new in the news. You kind of hear interest rates are down and dropping, and we're sitting probably 1% lower than we were this time last year, and that's created busy buying season, of course, summer, and then it's kind of kept on going right through into the fall now.
Yeah, I'll skip down to that one as far as where we are on interest rates, and you're still seeing applicants pretty motivated by that.
They are, and usually this time of year it starts to slow up a little bit. I think the rate environment has definitely kept that business going. Also, which Diane's probably mentioned, there's still a lack of inventory. So a lot of people are approved and they're just kind of sitting in the sidelines waiting and watching for the right place to come up. And fortunately for those who have been, they've gotten to see a rate environment that's dropped over the last 6 months that increases their buying power as well.
You just said people are approved and waiting. Are you seeing more of that than you used to see, or more of that than above normal?
I think last year it seemed that we had more people approved that weren't finding homes, and there was some discouragement there. And some people, this time of year especially, they don't find anything. A lot of people then get locked into leases or what have you, and then they start back up in the spring. So last year this time, I had quite a few people that decided, hey, we're just going to get a 6-month lease and we'll check again in the spring. There's nothing out there that is going to fit all the boxes. And so it was kind of that way. This year in the spring, we hit the ground running, and it seems to me that there's a little bit more inventory on the market. So we have had a little busier buying season just because there's a little bit more to choose from, but still a little bit lacking in inventory.
If you do get pre-approved and then you don't make a move on a home, how long are you pre-approved? Is there a shelf life for that? Does it require a little monthly or yearly maintenance, or how does that work if you are pre-approved for a home loan but then you're not going to activate it for a while?
Yeah, so what we have, the credit report's good for 120 days.
Okay. All right.
So when we get you pre-approved, you're good for basically 4 months, that 120-day mark. And then at the end of the 120 days, we keep in regular contact to make sure, hey, you're still looking and, keep your file active, that sort of thing. And then after the 120-day mark hits, we kind of decide, are you going to continue to look? Do we want to re-up that application, which really simply is only repulling credit? There's not a whole lot of new documentation we need if things in your personal life haven't changed. And then it's good for another 120 days. What I tend to see is a lot of folks, if they don't find anything in that 4-month window, some of them kind of go on the sideline a little bit, especially once we get into the winter season.
So you're locked into that 4 months. You're safe there. Do you have to demonstrate any activity, like you're looking at all, or you're just locked in on that 4 months?
Yeah, it's just the credit report stales, and you don't really have to demonstrate. I usually reach out once or twice a month with those folks that are pre-approved and just check in with them, because sometimes you'll run into, you may check in with them and they say, gosh, it's been 60 days, we haven't found anything, or some people are trying to sell their home or attempting to sell their home, and maybe, they haven't found anything to move to, so they're apprehensive to even try to sell their home. And when the holiday season comes, some people then just decide to go back on the sideline until spring and see if something else pops up. But I'm regularly checking in with them just to see.
You're just doing your due diligence there, right?
Yeah.
A little bit of that. This is Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, and our guest, Myles Link, mortgage loan officer with Opportunity Bank of Montana. Myles, how educated are mortgage applicants these days? There are lots of programs to choose from, which we will get to here shortly. But are people coming in with specific programs in mind, or do they still like to see and hear the entire menu?
For the most part, it's kind of a wide gamut of people. But for the most part, I would say borrowers are fairly educated. The technology that's out there now, people come across different loan types. They maybe go to some of the home buyer classes for those first-time home buyers. I think the borrower in general is a little more educated in possible loan products that they've seen or their friends have told them about. And so they come in and they ask, hey, so-and-so, had this loan. And I usually try to go through those loan products with them, and even sometimes go through the ones that they don't qualify for and let them know why. Because if they come in and I don't mention a product, they may say, well, gosh, he didn't mention that to me. And there are some products out there that are always hot buttons, and it's the hottest thing out, and down payment assistance or grant money or what have you. And there may be a reason you don't qualify for that. So I want to kind of show you, here are the products you don't qualify for. And I don't give them all of them, but kind of the common ones, and let them know why they don't. So then they don't leave wondering, gosh, why didn't he bring that up to me?
Yeah, for sure. If somebody chooses to work with you or wants to work with you, the get acquainted process, what are some of the questions you like to ask people at the start to, help you recognize whether or not you feel you can help them?
One of the first things that I usually ask borrowers potential borrowers when they come in, two things. One, how much do you pay in rent if you're renting? Okay. If you're not renting and you already own a home and you're going to sell. And then the other question I ask all applicants is, what's your ideal payment? Have you discussed and kind of thought about what payment you feel comfortable with that isn't going to alter your lifestyle, your current way of living? Because oftentimes, the way everything's automated now, oftentimes we can approve you for more than you feel comfortable with. And that's not what what I'm out to do is put you in a payment that makes you comfortable to where you're not altering, your current way of living. That first purchase, especially, no matter what the payment is, it's always a scary one anyway.
Yeah. So how do you start the process of getting a mortgage? I assume if you're doing things online, online applications probably take a fair amount of scrutiny, do they not?
Yeah, typically what would happen is if somebody chose the online route, we have a link and that goes, you can choose the loan officer, it'll come right to me. I open up the application, review it, and oftentimes, it's like any online system. There's things you miss or didn't know how to answer or what have you. And it's a good way to get the communication started because it gives me a way to look at the application, formulate the questions that I have, maybe some empty boxes that aren't checked, that kind of thing. And then I reach out to them and then kind of complete the application based on the information they give me. Or if somebody chooses to come in, we kind of go over everything as far as, like I said, what payment do you want? Then we can kind of go into do you have down payment or no? Yeah. Because different loan programs are out there for low down or no down. If you don't have that, there's some income limitations on some of the loan programs. But what I find most with the online application is typically it's somebody that usually has already owned a home or they currently own a home. They feel a little more comfortable with doing everything online. Mm-hmm. Those first-time home buyers, oftentimes they want that face-to-face meeting, and I encourage it. You walk away I always kind of print out the stuff for you, walk away with a lot of information.
Yeah.
And it gives you the opportunity to take that stuff home and review it, and then maybe formulate some questions that you just didn't think to ask in the meeting.
Exactly. On your end, on the review process, talking about documentation, what document? And I'm not suggesting it's a red flag, just maybe an oversight on the applicant's part. Documentation that's absolutely required for you to get things started.
It's always nice to have, the last year or two of W-2s to get a feel there. But from an income standpoint, the most important thing is a few pay stubs, most recent pay stubs. You may have somebody that's been on the job a few years, so they have those W-2s. And then when you get the pay stub, that year-to-date income maybe doesn't jive with what they told you they made or what their W-2s for prior years, and maybe there can be a difference there, and it kind of opens up that dialogue of what your year-to-date income isn't supporting what you said you made or what have you, and oftentimes there's a pretty good reason for that. Maybe they took a few months off for maybe they had a child or something happened in their life where it's easily explainable why the year-to-date doesn't match, and we can get around that. But the pay stubs show a lot for the current year and what's happening.
Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate and our guest, Myles Link of Opportunity Bank of Montana. Myles, I also wanted to ask you, I think I asked you this the last time you were in, but I think that the terms can be a little bit confusing. Excuse me. Differences between pre-qualifying and pre-approval.
Mm-hmm. Yeah, oftentimes we may have a phone call or somebody may come in and we kind of lay out the numbers. We say, what do you make, what's your income, your down payment, and we kind of work the numbers of, okay, given the information that I have, with these numbers, this is what you would be qualified for on paper. That's more of a pre-qualification. So you would say, here's your, what are your debts? What is your income? And in taking that information, this is what you're pre-qualified for. To take it to the next step, to get actually pre-approved, is when we would, then pull credit and analyze the credit along with, your assets, income, and kind of have that whole picture. Really, a lot of times people may want to just get an idea of what they would qualify for based on the debts they have and the income they have. Mm-hmm. And that's more of a pre-qualification. But once we take that next step to pull credit, have everything in front of us, that's more of a pre-approval. And really, when you're going out shopping, the agents, Diane's crew, and all agents for that matter, they really want you to take that next step and know that you've had your credit reviewed, you've had your income, assets, everything reviewed, and not just a pre-qualification, because they want to know that there's not going to be, a surprise when they take the next step and pull credit.
You also talked about prospective buyers, a lot of them being more internet savvy, and they might see a program that they think is a good fit for them, and so they come in and you discuss it, and maybe yes, maybe no. But are there mortgages or programs available for first-time home buyers now that seem to be quite attractive?
Yeah, Missoula being a target market, meaning housing is at a premium. A lot of the programs that in other parts of the state, the country, some programs you have to be a first-time home buyer, meaning you haven't. That definition in general is that you haven't owned a home in the last 3 years.
Right. Okay.
Here, most of the programs out there that are low down or no down, you don't necessarily have to be a first-time home buyer because they know that the housing market's so competitive that those programs are oftentimes, not all, but oftentimes available to anyone purchasing a home. But of course, your no down loan, which is the USDA rural development loan backed by the USDA, that's a great no down loan and you don't have to be necessarily a first time home buyer for it. There's some income stipulations. you have to be outside the city limits. So there are a few little
Right.
ins and outs of that loan, but it's a wonderful loan for somebody getting into their first home, or maybe they've owned a home in the past, but they just don't have the money to put down on this next home. And that's a great loan, but it does come with some stipulations.
Right.
And then, of course, we have some other loans that, VA loans that are no down if you're a veteran, the government loans, the FHAs, which are, minimum down. And so it really kind of goes to, do you have a down payment? And if you don't, what options do we have? And there are some grant programs for down payment assistance. Once again, most of those do have income limits. And so we kind of sit down and kind of look at the full picture of do you have a down payment or not? And if you don't, then, okay, we're maybe in these boxes, depending on income and some of those stipulations that those loans have.
Granted, interest rate's pretty low right now, but if you could please explain the term mortgage points or paying for mortgage points. If you have it in your budget, is that a good idea?
It's really a personal preference. Oftentimes, you may, if you're doing a $200,000 loan, let's just use that as an example, and you want to buy down the rate 1/8%. It might cost you, $1,000 to buy that rate 1/8% up front. Yeah. And of course, depending on the loan amount, but that 1/8% may only be $20 difference in payment. So what we do is we kind of take a look at what's going to be your interest savings, your payment savings over time, and if your break even point is 7 years out. I'm one that's a little more apprehensive to buy down the rate and pay extra points up front to get to buy that rate down, just because 7 years is a long time to be locked in to say, gosh, if we take this lower rate, we're going to save $20 a month, but it's going to take us 7 years to recoup that money. And oftentimes that's what you see, is that break even is out there. And unless you're absolutely sure you're never leaving this house, from a personal perspective, I just don't necessarily approach it at the buy down's a good option in most cases.
So really, you could define it as that the way you explained it to me, or the way you explained it to prospective buyers, that's kind of to make it work, to make it pay. It's a pretty long-term commitment then, yes?
For the most part, it is. Anywhere from, I would say most of the time the minimum payback is 5 years, but sometimes they're out there at 7 or more. And that's a long time to know. You may be in the home, but life changes. You may refinance. Maybe rates drop and you refinance. Okay. Maybe something happens in your social life and you need to get out of the home, or you sell and buy another home. And so 7 years is a pretty long time for break even. And we look at that if that's something that somebody wants to explore. But from a personal experience, I would say most often it's not financially probably the best decision in most cases.
Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. Our guest, Myles Link from Opportunity Bank of Montana. Myles is a mortgage loan officer with Opportunity. Myles, what is a practical amount of time you should expect before you can get a mortgage, before everything's kind of buttoned down and put to bed?
Mm-hmm. On a purchase with some of the volume levels we've had, 45 days is a good number when it's very busy. Just from an appraisal perspective, they're backed up. Home inspectors are backed up. But in general, from the time you put that offer in on a home and get it accepted, we're still sitting at that 30-day mark, and that's usually from start to finish. That's usually still attainable, even in a busy market. You just have to have things fall in place and get the documentation that we need, get your home inspection scheduled. I'll get the appraisal scheduled, but we're still able to meet that 30-day mark. But it does get a little tougher when the market is as busy, because all the people we depend on, the appraisers, we depend on a lot of third parties to get the things to us to where we can kind of complete that loan. And so 30 days is still attainable, but sometimes 45 gives us a little extra window.
Well, and even that to me seems very, very reasonable. And as you say, the trend seems to be a lot of people are getting pre-qualified, pre-approved for that in the event that there might be that downtime before they are able to find a house that they might really, really want. But at least they got it for a minimum of 4 months. At least they've kind of got that in their back pocket.
Yeah, and in a competitive market, you may not have time to go look at a home, then meet with the bank, get pre-approved. It may take a day or two, depending on your circumstances, to get that pre-approval completed. And so it is nice to, when you're looking at homes, to already have that in your back pocket, to where hey, this purchase price, this down payment is going to be this or this is going to cost me this per month. And then you're ready to make that offer right away, as opposed to then maybe taking a few days to get everything in place. Because in that competitive market, sometimes those homes just aren't available anymore. Yeah,
those are excellent points. How much interest is there these days in reverse mortgages? That probably pertains more to older homeowners, maybe exploring some options.
The reverse mortgage is not a product that we do. We don't, as an institution, offer it, and there are very few institutions in the state that offer it because it's a real specific product. The loan officer that's offering that product really has to be well versed in the product, because you don't do a lot of those loans, and so you really have to be on top of it. And that's just something that we just don't do.
A special thank you to some of Diane Beck's marketing partners that helped bring you Missoula Real Estate Today. That guy right there, of course, Myles Link of Opportunity Bank of Montana, Carol Blodgett with MakeItMissoula.com, and Rob Fleming with Man Mortgage. And Myles, what you touched on this briefly when we were talking about maybe buying down mortgage points, but what is a good debt to income ratio formula? I mean, you want to be sure you can actually afford the place, right?
Yeah, excuse me. Nowadays everything's automated, so when we put in all your data, your income, job history, assets, and everything, we run it through an automated system, and so that automated system weights the whole borrower profile. So it weights how much, what do you have for assets? What is your debt to income ratio? That sort of thing. So sometimes that automated system allows us to push the debt ratio based on the borrower profile, strong credit, etc. Most of the time, in most instances, depending on the loan type, when you hit 50%, the loan busts. So we just can't get a loan above 50%. And it depends on a person's income, because 50% could be, if they have a lot of cash flow, maybe 50% isn't a burden. But
yeah.
In general, we like to see, on the top end, we like to see people on their total debt, about 40% would be kind of that top end, 42, that sort of thing. On the house, just the housing part of that ratio, which is just your income to your house payment, somewhere around 30% seems to be kind of a common number that people will pay for their house payment. Once again, we have to look at everything, because people have a lifestyle. Maybe they belong to some clubs or different things that they pay money out each month, or they have childcare. Some loans, most loans out there don't take into account childcare and some of those other things. So, if somebody's pushing the envelope and up in the 40% range, we need to sit down and look at what other bills do they have that aren't on credit, that the banks just don't take into account, to make sure that you can still continue the lifestyle you have.
What are some of the, I don't know if I want to use the word big or common, maybe I'll use both. What are some of the more common or big mistakes people make during the mortgage process that you need to help them with?
Yeah, one of the things, once we have you pre-approved, let's say you find a home and you're under contract, the big counseling session that I have is just don't go out and purchase anything on credit, and try to keep your credit cards, things of that nature, to a minimum. Because say 4 or 5 days before closing, almost every bank now does a soft pull. Doesn't hit your credit, so it doesn't show up, but they go out and check, are there any new credit inquiries?
Yeah.
If we see a Ford Motor credit or something like that, we're going to ask, did you go buy a car? Or if your credit card balances went up substantially, that may change your payments on those credit cards. And so we try to tell people, you have to live, but try to keep that to a minimum because, you hate to have everything in place. And maybe somebody is kind of on that edge of qualifying and not qualifying. And then they go out and buy a car, or they go out and rack up some debt because they're buying new furniture for their new house or something like that. So that's definitely something we counsel them on is try to keep that to a minimum because we will be checking at the end to make sure nothing has drastically changed in their financial situation.
Is there a most difficult part of the mortgage process?
Oh, I don't know. I like to think the mortgage process is pretty smooth.
Okay.
As long as you have the right people doing the job for you, I like to think that, if up front we get the proper documentation, it should be a pretty smooth process. I think on occasion, and luckily I don't have to deal with this. This is more of the borrowers and the agents is, sometimes there are some home inspection issues that you have to work through. And I would say sometimes that's the most difficult part is, this home you really wanted and you got your home inspection and now you find out there's maybe some things wrong with it. How are we going to negotiate this out? Is it something I can live with or not? And I would say probably the home inspection maybe is the most taxing on people and probably makes people most nervous waiting for that home inspection to come back from a seller's side and a buyer's side.
Okay, well, look at you. You pretty much segued right into my next question without even cheating and looking at my notes. Before we wrap it up, you get to cheer for your team now. What makes Opportunity Bank a great place to work and to do business with?
We're a Montana-based bank, based out of Helena. We have 20. I want to say maybe, we added a few. We might have 23 branches now. I think just the local piece of the bank is something that's a huge selling point. You're always dealing with you have a front person in the loan officer. If you have a question on your mortgage and you need to call the servicing department, on all conventional loans, we do service those. So if you are calling the servicing department, you're talking to somebody in Helena. You're not talking to somebody, who knows where.
Right.
And I would just say it's a employee friendly bank, attention to detail, borrower oriented, and it's always great dealing with a local institution.
And you stay involved too, don't you? Opportunity Bank's involved with a lot of different community events year round.
Yeah, we have community events going on all over the state. We're supporters of all the athletics, whether it be youth all the way up to the college level in all the towns, and that's just part of a local community bank being involved in the community.
Sure. All right. If folks would like to learn more and contact Myles Link, mortgage loan officer with Opportunity Bank of Montana, how do they go about doing that?
Well, we have our website, which is opportunitybank.com, and in the lending side there, you can have a list of all the loan officers. And I always give people my cell phone number. That's the easiest way in case I'm out of the office or getting a fresh cup of coffee, have it in my pocket, and that's 406-544-5115.
And you have two offices in Missoula, yes? Or
we have two banks in town,
I'm sorry,
and then we do have a separate mortgage-only department as well, just because our staffing for mortgage, we can't fit in either of the banks. And so we're at 2800 South Reserve is the mortgage department.
All right. Great job, and always great seeing you. Well done.
Thanks so much. Take care.
Thank you for listening to Missoula Real Estate Today. We hope you found this morning's information to be helpful. If you have any suggested topics for any future Missoula Real Estate Today programs or any questions about buying or selling, contact Diane Beck with Windermere Real Estate. Email dianebeck@realtor.com or visit her website, homesinmissoula.com. That's homesinmissoula.com. We'll see you next time on Missoula Real Estate Today.